sustainable economic recovery. So today we are taking a closer look at the credit rating agencies and what the latest S&P Global Rating Report means for Zambia. The ratings shape how the world views our economy. They influence investor confidence, borrowing costs, and the government's ability to access affordable financing. S&P's recent assessment offers a snapshot of Zambia's progress on debt restructuring, fiscal reforms, and economic stability. But it also highlights areas of concern that could affect our future. And today we unpack this rating, what this rating says about Zambia's debt position, our economic status, and the reforms still needed to build a more resilient and sustainable economy. And joining us today is distinguished guest Robert Mwale, who is a public finance researcher at CTPD and the CSO Debt Alliance Coordinator. Mr. Mwale, good morning and welcome to the hot seat.
Good morning, Mr. Zulu, and thank you so much for having me.
All right, thank you very much for according us time to have you on the hot seat on this very, very important subject to understand the significance of Zambia's new credit ratings. We first need to appreciate where we're coming from. So I want us to start from the beginning. How has Zambia's public debt evolved over the past few years, and what factors continue to drive the high debt vulnerabilities?
Okay, thank you so much. I think to start with, what you're going to note is that let's pick it from the 2005.
Yes.
In 2005, as a country, we reached the hippie completion point, where we had most of our debts that were owing to the bilateral lenders cancelled. At the same time, we actually benefited from the multilateral debt relief initiative that saw most of the debts that were owing to the IMF also cancelled. So as a country, we almost had all of our public debt cancelled, and we were starting sort of on a clean sheet. But what you're going to note is that with the debt cancelled, as a country, what had happened is that our credit rating then improved. We had the international financial market opening up to us. And so what we noted is that first we begin to move away from the concessional loans to the commercial loans. So what you notice is that the concessional loans, these are loans that we get from the multilaterals, but at a lower cost, which is interest rate, and longer periods of maturity before we can actually repay. So we moved away from the concessional loans, we went to commercial. And so there were some increased activities to try and drive growth within the country. And we borrowed a lot of money, the Chinese loans. We got a lot of Chinese loans at commercial rates. We also went further in 2012, I think this is when we began to get more interest in these things, where we, for the first time, we got the Eurobond of 750 million. In 2014, we went back on the market to borrow a Eurobond worth $1.2 billion, $1.25 billion. In 2015, again, we went back. In 2014, we borrowed $1 billion. In 2015, we went back and borrowed the 1.25 billion, making a total of $3 billion worth of debt in Eurobonds. Not only that, on the regional level, we went to borrow from the Africa Export and Import Bank about $43 million. At the same time, we also went to support our trade and all those things. We borrowed from the Trade and Development Bank. And as we were getting towards 2019, our debt levels had grown and become unsustainable. And at this point, because there was no information in the public, we could not actually assess exactly what we were owing. We only came to just find out after we did a debt sustainability assessment in 2022 that actually our debt levels had grown to over $33.3 billion. And that is how unsustainable our debt levels had been. And so when we realized in 2019 that we were most likely not going to be able to pay, what we saw is that in 2020, government actually requested then to have debt repayment frozen under the G20 debt sustainability initiative, debt service sustainability initiative. And what had happened is that some of the creditors actually agreed to freeze this repayment up to the following year in April. But other creditors that represented, I think, 40% of the Eurobond holders rejected this offer in October 2020. And so as we got to November, when our coupon became due of 42.5 million, we were not in that position to actually repay, and we defaulted. And maybe the factors that had actually led to that, besides us borrowing too much, as we were getting to 2016, what you notice that our copper, which is our major source, 70% of our forex is coming from export in terms of copper. Copper production had actually gone down, and also the prices of copper on the international market had gone down. As we got to 2020, our currency actually depreciated by 64%, moving from 12 kwacha average per dollar to somewhere around 21 against the dollar, and that's how we were trading. Inflation had also picked up to double digits, and all these factors were compounded and made even more complicated with the issues around the COVID pandemic that hit us. And so Zambia was not in a position to actually repay. And what we noted is that in 2020, we defaulted on our debt, and we were actually downgraded by S&P to CCC negative. And then what are the factors that actually drive our vulnerability up to this point? I think basically the issues that continues to actually drive our vulnerability is that we have high debt service cost. So our debt service cost is extremely high. If you look at our budget every year, you find that on average we spend almost a quarter of our budget to just service debt. And when you look at just our revenue that we mobilize, we spend almost half of our tax revenue to service debt, which is very unsustainable. And what you also notice that there seem to be an increasing tendency in terms of our domestic borrowing. We have gone so much on the domestic market to borrow. And what that does is that you are choking out private investment. And so if you do not have private investment, investors that can grow and operate within a country, that also narrows your revenue base where you get your taxes. And then when you look at most of our debts, I think most of our debts are subjected to foreign exchange rate risk, because these are dollar-denominated loans, and so we need to repay them also in dollar, and that puts pressure on our currency. And then when there's a depreciation in terms of our currency, that manifests in the cost of what we must pay, because if the dollar remains constant that we must pay, and the kwacha has depreciated, it means at this point we'll need more kwacha to actually meet that amount that we must repay, and that becomes a challenge. And I think the major issue is our limited base in terms of domestic revenue mobilization, and mainly this is compounded by the issues that are happening in the extractive industry. What you're going to notice that our tax system as it is for the extractive industry was not made for us. We were not there when it was being made, and it does not serve our purpose. What do we mean here is that when you look at our taxation system, it's more of, for the multilaterals on the extractive side, it's more of resident-based as opposed to source-based. What do we mean here is that we do not benefit as a source country where these multinationals are actually operate, because they tend to shift all the profits to where they are actually residents. So we move a lot of profits there, and in their country they are actually benefiting. And so I think those are factors that actually drives our vulnerability. And so you find that where taxes must be applicable, where we must collect and get something, they will tell you they are trading amongst themselves. And because they are trading amongst themselves, you have a challenge now to track which activities were completely done within Zambia and what profit was actually collected from the activities within Zambia. And then you begin to have issues around, because they use transfer pricing where they're shifting profits to their end. And then you begin to put in issues of arm's length principle to try and all those complications that comes. And that's the reason why, from our perspective, we believe that it is time that we move away from this kind of taxation of the mining to move to unitary taxation. So what unitary taxation does is, if a multinational has got 10 companies, we add all the activities and the profits, and if they report to say the total profit in the 10 subsidiaries that we are operating is 10 billion, then that is we now do a formula apportionment where we say activities that were in Zambia, you get 15% of this profit and whatnot, and then when we do that, there will be no we have raised.
Mr. Mwale, I want you to break this down for us, because we've heard of Moody's, Fitch, and S&P, but some may not fully understand their influence on the economy. And thank you for breaking down, the debt and everything, and to get to where we are now. But in simple terms, what are credit rating agencies, and why do their assessments matter for countries, and in particular Zambia?
Okay, thank you so much. So in simple terms, the credit rating agencies, these are basically organizations that assesses the risk of an investor lending money to a country by checking whether this country has the ability to actually pay back what they owe. So basically what they do is that they'll look at some factors within the economy. So they'll look at the macroeconomic conditions of that country. So they'll look at what is the growth of this country, because basically it's from that growth, which is your stake, where you get your taxes. So they look at how is this country growing? How is the environment in terms of investor confidence? They'll look at how is your money market working in terms of your monetary policy. They'll look at different kinds of factors, even including the political stability becomes also a factor. And when they are satisfied based on what they have seen, they will then decide to assign you a score. And then investors will use that assigned score to decide whether they can invest in that country or not invest in that country. So why this rating then matters, the rating that they give matters, is that, number one, it tells the investor at what cost they must borrow you money, because you know that there is no country that can develop without at some point going to access loans. So if this country if we want to fund our road, if we want to fund our schools, if we want to fund our hospitals, and we need external financing, the rating tells the financier what is the risk that is involved in giving money to Zambia. And then the rating also can attract or scare the investors away. So investors do not want to be in a country that has got a bad rating, because the environment in that country is not stable. So they will not prefer to be in that country. So it affects whether you have investors come to invest in your country or you have people not come to invest in your country. Ultimately, the rating will affect the cost of living of the citizens. Because what will happen is that if government is borrowing at a higher cost, the repayments that government must repay, you must know, or by now we all know, that whatever loans that government is contracts, it's us, the taxpayers, that must pay with our taxes. So if we are borrowing at higher cost, government will come to us, impose higher taxes, and those higher taxes will mean that the cost of living will go up. And that then becomes our interest, why this rating really matters, because it will speak to whether we will have a comfortable state and quality of life, or we will not have that quality of life because of that rating. So we then get interested in the rating.
All right, let's speak to ratings here, because recently Zambia's foreign currency rating was raised to CCC+/CC. What does S&P's latest sovereign rating mean, and what does it reveal about Zambia's credit worthiness and overall economic outlook?
Okay, so basically, like I said, when we defaulted in 2021, our rating was downgraded to CCC negative. Now what we've done is that over the years, from 2021, we moved a bit up to what was called selective default, which was the SD that we have been. So at that point when we are in selective default, that rating is telling investors that Zambia is still in a default state. It does not have the ability to meet the debt service pressure or the debt repayments. So now, the move to triple C plus, this one signals, what that means is that we have actually moved from the default setup. But where we have moved to is not far away from the default. So what you're going to notice that the upgrade is simply giving an outlook or to the investors out there that we are out of the default state. But it does not translate that we have arrived where we need to be, because the triple C plus rating is also means that in terms of the grade where we are, it's a sub-investment grade, and it is also highly speculative and grade, and in short, we are still in it's a junky rating. I think that's a better word. It's a junky rating. So what that means is that Zambia is still below an investment grade, meaning no investor would look at us to say they can come and do their investment, because we are the loan us money to put in development investment. We are still below what is required for us to get there. And then what that means then is that S&P is acknowledging that we've made improvements. And that's the reason why in their report, they actually give us the reasons why they feel we must be there, because they have actually says we are still in a junky state, but there is a stable outlook. What does that stable outlook means is that they are looking at the economic conditions that have prevailed, and they are thinking these may be sustained in the long run. And if then they are sustained, we must then be getting out of the default. So what are the things that have led them to make that decision? Is number one, they are pointing out, number one, that our debt restructuring process, there is tremendous progress that we have made there. So that is what they're acknowledging. They're saying 94% of our debt has been restructured. And also they have noted that our negotiations with the Chinese commercial investors have reached an advanced stage where we may likely close up on a deal. So basically, they're acknowledging that we've done 94% of our restructuring. But we must also appreciate that this is restructuring, the 94 that has been pointed out to, is agreements in principle. So these are commitments that, when you say an agreement in principle, it's not legally binding. So you need then a process that must follow thereafter to legalize this agreement. And that's the reason why I think what you're going to notice is that only say 57% of our debt has actually reached that point where we have done agreements in principle and went further to actually finalize this. But what you're going to notice is that there is a risk that is involved just on the restructuring, because these guys, S&P is acknowledging that there are some investments, there are some investors that are likely not to fall under the restructuring deal. So I'll give you examples. So amongst those is that we have two regional investors that we borrowed from. The Afroism Bank, we borrowed the 45 million US dollars. We also have the Trade and Development Bank, where we borrowed a $543 million. So what these banks are, they claim to have a preferential creditor status. So they are saying they are equal to the IMF, they are equal to the World Bank. So what that means is I'm saying the way we do not subject the IMF to the restructuring, meaning when we are restructuring our debts, the debts that we owe to these traditional multilaterals are not subjected to the restructuring process. These also are saying they have that status and they must not be subjected to this. whereas the IMF, in the restructuring, the guidance and the advice that was given to the country is that we relegate these ones to the commercial lender status. What that means is that we must also subject them to restructuring. They must reduce their interest rates that we owe on the monies that we owe. They must also extend the repayment period. And so what happens is that these if they go now for litigations and the litigations gets to be extended, that then will impact our negotiations in the restructuring. And if we make a mistake and say we accept that these maintain their preferential status, what will happen is that most of the commercial lenders that we've borrowed from will also seek a separate treatment outside the treatment that is provided from in the G20 common framework. And that's the reason why, if you have noted, after we've restructured 94% of our debt, it has become increasingly difficult for us to finalize our restructuring. Why? It's because of these contentious debts that we are having. These small amounts, but very contentious, and how we treat them may actually cripple or cause actually the G20 framework, all of it to actually crumble. And that's one challenge that we have. And then they also note some improvement in terms of our fiscal and economic fundamentals. These we know they are talking about from the time we defaulted in 2020, our GDP was in negative, now it's in positive. They are looking at our inflation and all those things. Those are the factors that they are looking at. And they are also talking about, they seem to see a renewed investor confidence in terms, mainly in the mining sector. And I think we've noted so many other investment interests in terms of renewable energy and all those things. But I think our over and above, I think they also acknowledge that we are still in a highly speculative stage and our status is still junky. They also recognize, and they are explicit, I think this is what we must also understand. They are saying our debt burden in the future is going to be large. What does that mean? They are saying after we have restructured our debts, our debt service cost is going to go up. And when our debt service cost goes up, meaning we may actually find ourselves where we are now, half of our budget may actually need us to be the money that we are servicing our debts. And so how do we then navigate ourselves between now and that point is that they are hoping that then our domestic revenue mobilization strategy is going to improve. And with that improvement in our domestic revenue mobilization strategy, then we may have a budget that will be able to cater for the cost in terms the increased risk that exists in terms of our cost. And so if these factors, and then another thing that they based on their argument is that the copper price, the commodity that we export so much, copper, is doing so well on the international market. Right now, I think it's by the time they were doing this, it was at we were looking at $10,400 per metric tons, and they are saying between now and 2028. Their forecast is, and their projection are saying that the prices may actually average 10,500, and that is good for us. But that is an input in their assessment. So if the copper prices collapses, then that vulnerability will reflect in the rating. So despite us having a good rating, that rating is actually sitting on factors that we do not have a control over.
Okay. So there's a risk to it. But I want you to bring it down and bring it closer to home here. What does the credit ratings actually mean for the ordinary Zambian in their day-to-day lives? Why should we pay attention to these ratings?
Thank you so much. So the credit rating to an ordinary Zambian means, number one, the cost of living. So what do we mean then? If government is borrowing at expensive rates and government is taking a huge chunk of the national budget to support the debt repayment, there is less money that then remains to spend in the social sector. So there will be less money to support the Farmers Input Support Program. There will be less money for government to channel to hospitals. There will be less money for government to actually create more jobs. There will be less money for government to actually support education. So what this would mean then is that to supplement this, government may increase taxes, government may remove subsidies on fuel, on electricity, and even on agriculture. And what then that would mean is that you as a common citizen, to go and buy foodstuffs, you need to pay a higher price. You as a common citizen, to access fuel, you have to pay the higher price. You as a citizen, to have access to electricity, you have to pay this at a higher price. And even transport, just ordinary transport, for someone that is moving from Charleston to town, Mutendele to town, they begin then to pay a higher price because of that increase. Then issues around job and business opportunities. You find that because government is in this place, they no longer have the capacity to create the much needed jobs for the people. And then when there is so much unemployment, what you note then is that families that are dependent on those that must be employed to actually have a good life or a good quality of life, they are deprived of that. In terms of business opportunities, because government now is trying to repay these loans, they'll go on the domestic market, try to borrow. And then there will be a man that has got a good business idea and may want to access a loan. They will not be given that opportunity because the loans will become expensive. So they cannot open the business, they cannot create jobs, and that becomes a problem. In terms of quality of service, is that government can no longer now buy enough medicines that we need. Government can no longer now invest so much in the schools. And so what you have then, it cannot invest in roads, water and sanitation. So then what you have is then you have the quality of service that is compromised and the quality of life in a way affected. In terms of kwacha stability, because now these loans that we are borrowing, we are paying, so most of them they are in foreign currency, they are denominated in foreign currency. That means that when you are repaying, you are actually converting your kwacha to get the dollar. So you're putting pressure on your kwacha. So your kwacha will lose its value. And then if you look most of our goods, these are imported goods. So meaning we now need more kwacha to import these goods. And when these goods are imported, there's that inflation aspect of it. So now instead of you buying it at a cheaper price, the cost is transferred to you. So you have goods and services that are expensive. And ultimately, what you're going to see is that an ordinary Zambian who is an employee somewhere will have to pay more taxes for government to raise more revenues to support the repayment system. And so these become critical issues as they affect us even in our day-to-day living, in as much as we may not maybe be keen or interested to know what this means.
All right, because obviously the ordinary citizen just hears numbers and ratings. But thank you for breaking that down, Mr. Mwale. You touched on debt restructuring earlier on, because debt restructuring has been a long and complex process, but it remains a central topic in discussing the country's public debt. Yes. And thank you for giving us an update on the progress that has been made on debt restructuring and its influence on Zambia's credit and future ratings. But we want to find out from you what challenges can affect Zambia's ability to manage its debt sustainability.
Okay, so thank you so much. I think what you're going to note, number one, is that even S&P Global Ratings, when they were coming up with their rating, they noted one thing, is that our country is a single commodity economy. What do we mean? Is that we are heavily reliant on copper production as a country. So you find that if 70% of your foreign exchange earnings are coming from just copper, then you have a problem. Because what happens is that copper, you may have control over production to some extent. You may put up policies like it is now. We are targeting to have 3.1 metric tons production annually by 2031. But you do not have control over the price. So the price is being determined on the international London Stock Metal Exchange. So now what will happen is that when the price and the demand on the international market falls, then your earnings crumbles. And then as a country, you do not have enough earnings to actually support your repayments, and you are in a crisis. And then when you look at the, also you look at the pattern or the composition of our debt, you find that most of it is actually largely external debt services being done in foreign currency. So what that tells you is that for you to actually meet up your demand is that you need a lot of foreign currency to actually support this. And that will mean that you're putting more pressure on your kwacha. And then you have issues of depreciations and all those things. That makes then your borrowing cost extremely expensive. And like we had stated earlier on, our domestic revenue mobilization, because ultimately what makes us go to borrow is that as a country, when we look at our budget and whatever we are able to raise, either through tax revenue and non-tax revenues, that is below what we have. And even after we've added some grants from our partners, when that does not meet our budget, then we need to go back and do what? And borrow. And so then, when you look at our domestic revenue mobilization, our domestic revenue mobilization, when you look at the tax base, number one, it's very narrow. And when you look at a single, you find that the burden is borne mainly by the ordinary citizens who are paying pay as you earn. So you find your pay as you earn is the one that is actually the largest contributor to the tax revenue. And then you have a taxation system that is favoring the multinationals on the extractive side. And apart from that, you have a lot of leaks in terms of illicit financial flows from the extractive industries. And then when you look at that, you have a problem, because where you are getting 70% of your forex, the contribution in terms of the revenue to the treasury is too low. And then you have a problem. And when you look at a country like ours, we are still vulnerable to external shocks. So meaning our production, because for us to actually produce, for government to actually collect revenue, we must have good productivity. And then our production is heavily reliant on hydropower. And hydropower is heavily reliant on weather patterns. So if there is a drought, we are in a situation where we are now, where we have extended long hours of load shedding. People in compounds cannot open their shops, cannot do their businesses. Production in different industries are not operating at optimum. So what that does is that it reduces what your revenue, the revenue that you are raising, or revenue applicable to be subjected for tax purposes. And that lowers what you collect in terms of your taxes, and you have those vulnerabilities. And I think the other thing is that you have now, as a government, you've gone now and increased your activities on the domestic market. You shut out the small businesses that want to access these loans or to operate and expand and grow their business. And indirectly, you are reducing your base that you need to collect on. And so what do? You have a fiscal deficit that is widening all the time, and you continue to go and borrow. So unless those are addressed, then you are likely to continue on a debt unsustainable path, and that becomes a problem. Someone said that if you see the multilateral organization in your country, you shouldn't be happy. You should be worried, because these the Bretton Woods institutions are not here for us. So that becomes a challenge.
In case you're just joining us, this is the Hot Seat on Hot, and you're listening to us live on 87.7 here in Lusaka. Also live on Canela FM on 97.7 FM. Joining us in studio this morning, our guest, Mr. Robert Mwale, is a public finance researcher at CTPD and the CSO Debt Alliance coordinator. We continue with our conversation this morning. We're having a look at, a strong look at ratings, and they depend on reform and the reform agenda, and investors look closely at government commitments here. And I want you to break this down for us. What reforms are most urgently needed to improve Zambia's fiscal position and restore investor confidence? Because we've heard from government, they're big on wanting to bring a lot of investors in, but investors just don't come on goodwill.
Okay.
So just break it down for us.
So number one, that I will be explicit, is that we must have reforms that boost revenue mobilization. So number one is that currently as it stands, in as much as we want investment in the mining sector, the taxation system that is in the mining, in the extractive industry, does not favor us. So we must then push for the reallocation of taxing rights, especially in the extractive industry. What do we mean there is that we must ask for a move away from what we are currently doing to unitary taxation and formulary apportionment. What that means is that we are going to have a stake in the profits that the minings are giving us. And we must appreciate that the copper, the minerals that we have, these are depleting assets. And we must get the best dividends for our country from there. Secondly, we must tighten our public finance management. And also, what that means is that when you have a weaker public finance management, is that you have deficits and you have arrears accumulating while you are not seeing them. And so what you're going to note is that key issues there that you're going to notice that, number one, I think for the longest time, we have a lot of state-owned enterprises that are extremely non-performing. That government continues to who continues to ride on government guarantees to actually accrue debt. And that becomes a problem. And then not only that, you find that the governance structures in these SOEs are not robust to actually ensure that we actually get the benefits that we need. And so, and again, what you note is that with the debt situation that we have, as a country, we've become smarter at borrowing. So we've decided to go for off-balance sheet borrowing. So this is where, if we break this one down, simply put, is that the borrowings that we've had, which are sitting on our balance sheet, is to a common citizen, these are the borrowings that you have that sits on your payslip. And then when you want to borrow extra, the financial institutions are able to check from what is on your payslip and say, no, you have reached the limit, you cannot continue borrowing. So that is the borrowing that we've had. But what we've done now is that we've gone for off-balance sheet borrowing. The public-private partnerships. So with the public-private partnerships, these are not sitting on the balance sheet. So when someone looks at the financial health of the country, they are convinced that Zambia is doing so well. But we have a lot of off-balance sheet projects and loans that are going on. So then what do we do to control that? There must be transparency in how we procure services that must sit on the public-private partnerships. Why is that important? Is that ultimately the cost is borne by the citizens. And so they deserve to have access and to know the actual information. So we must know how many projects are we running currently which are on PPPs. How much is the interest on these PPPs, and how long are these PPPs? And so we must have that information through the purpose vehicles that are actually pushed forward. And we must actually strengthen the oversight of Parliament. You know, despite most of our dates that we contract going through Parliament, but what you're going to note is that Parliament is sort of just a single, a simple majority arrangement. So it depends how many people have got more MPs in Parliament to get certain things moved. So that becomes a challenge. We must increase the oversight and the power that must be given to Parliament to ensure that there is a bit of control in how these dates are actually contracted. And then I think the major issue then would be mainly to just diversify the economy. We cannot over depend on the mining industry or sector as a source to actually support us. So once these reforms are actually put in place, then we must get to a point where we begin to see ourselves coming from the situation where we are to a level where our debt levels become sustainable.
Let's break it down. Let's break it down to the household level. How can the country realize the benefits of such reforms, especially at household level, so that I am able to feel that these reforms are actually impacting me directly?
Okay, so what you're going to note is that, for instance, from what we are saying, if as a country we widen our revenue base, we are now able to support our budget maybe 95%. What that means is that even if we go and borrow, our repayment cost will not be too much. So what that means then is that government will not have so much pressure in terms of issues around the exchange rate to repay. Mm-hmm. And so you have the stability in your kwacha, meaning the fuel that maybe you were, if the exchange rate today is 23 kwacha and the exchange rate drops to 13 kwacha thereabout, it means the cost of the imported fuel will be low. And mean the pump price of fuel will be cheaper. So if the pump price of fuel becomes cheaper, a citizen will have access to cheaper fuel. And that fuel acts as also an input in production. So you have goods and services that are imported become relatively cheaper. And then when you have better debt management, government will free up resources. They will spend they will invest more in education. They will invest more in health. They will invest more in social protection. So you have citizens having access to a farmer's input program. You have loans made available under SAFE, where government citizens would go and borrow for irrigation, for mechanization, and increase their agricultural productivity. You are going to have you and I access healthcare systems where we are going to find medicines there. We are going to have access care facilities that have got doctors and nurses that are well paid and are offering a service to us that is of higher quality. We are going to be in a situation where if our procurement under the SOEs become better, we restructure our SOEs, the state-owned enterprises, such as ZESCO, ZAMTE, and all those things. You and I are likely to have access to cheaper electricity, access to cheaper and affordable communication system. These then better the quality of communication as well as service delivery. And with that done, then you have an economy. If we diversify our economy, we will create more jobs, and especially for the youths. And you, if you've noted, I think most of us in Africa, we have a youthful population, and the youthful population is mainly agitated when there are no jobs that are being created, and that's the reason why we see a lot of things that becomes not desirable happening. And so we need to get to that point. And when these reforms are done, they then translate in how I've explained into an improvement in the quality of life where our citizens are able to feel that they can now enjoy living in a country that has these reforms that are working out for them.
Mr. Mwale, there's something that you've touched on a lot on this show today is domestic or revenue mobilization. Domestic revenue mobilization. Looking ahead, it is desired that the country is restored to sustainable debt levels on one hand, and also, grow its revenue base on the other hand. So, how can Zambia strengthen domestic revenue mobilization to reduce borrowing needs and meet its developmental needs?
So when you look at us as a country, I think one of the things that are happening that you'll see that there's a challenge. You'll find that these on domestic revenue mobilization is that we keep on saying that our tax base is narrow and we need to broaden it. But you find that the proposals that we bring forward for broadening our tax base mainly is that we want to formalize the informal sector. That's what we discuss. And then you find that to a greater extent, when we say we formalize the informal sector, to others it means that we want to target the small businesses and ensure that they come in the tax based system. But what you're going to notice that there are a lot of thriving businesses that are making profits that are not formalized. Mainly it's because they do not understand what's the benefit that they'll get by formalization. So this is where we have an opportunity as a country, where those SMEs that decide to formalize their businesses, you find that when you ask most of them, they are scared. If I formalize my business, I'll be required to make returns every month and do all those things. And in an event where I miss my return, the penalties that will be applicable, it will be, I'll close my business. So the cost that is there. So what do we say here is that as we want to formalize the smaller businesses, let our tax system be simplified to meet them. Number one, we must also incentivize the smaller businesses in a way where if they come to register, let's provide them with training. Let's put things in place for them to say, what are the benefits of me formalizing? If I formalize my business and I still do not have access to cheaper loans to expand and grow my business, what is the benefit that is there? So these are mechanisms that government must be put in place where you link formalizations to incentives, where they will have access to cheaper loans, where they will have all these services brought closer to them to actually increase their visibility, to give them an advantage so that they operate and thrive. And I think what we've also said so much is that there is need to improve the way we are taxing, especially the mining sector. I think the mining sector is not properly taxed. We have a lot of incentives that we give, not only to the mines, this also extends to other sectors. Government is spending more in terms of incentivizing a lot of activities within the country, on the promise that when these businesses become operational, they will create jobs and all those things. But at the same time, let not our incentives become too much of a cost. We must look at reducing taxes, exemptions, and also ensure that we reduce the incentive misuse, where we do not just incentivize all these things. Why? Because incentives, these are potential taxes that we must have collected, that we lose out because we want to promote a certain industry to actually grow. And then I think we have noted ZRI modernizing their tax system, where we are now moving more to the digital aspect, which is recommended. But I think there is more that we must do in terms of taxing the wealth. You see, there was a lot of cries when government actually introduced a withholding tax on profits that we made on government securities like the bonds as well as treasury bills. We must understand that actually in countries that are progressive, wealth tax is more than this tax that we are charging, the income tax that we are charging on pay as you earn and all those things. So we must then begin to move away to that place where the contribution of the wealth tax become more to our tax bracket as opposed to what we are currently saying. And then we must actually not shy away from the fact that we need to grow the economy for us to grow the revenue. I think ultimately that is what is important, because when the stake remains the same, there is no way you'd want to get more from that same stake. So we must then increase the size of the economy for us to increase the size of what we must get. So that then calls on government now looking beyond what they're doing. Agriculture, what should we do? Do value addition. So if I was just producing tomato and taking it on the market, and we know that sometimes the prices of these tomatoes becomes cheaper than the time that when you were planting, maybe you were thinking by the time I'll be selling, the price will be higher, but the fluctuations brings your price down. We must have mechanisms for agriculture where we do value addition. Why can't we transform the raw tomato into tomato sauce? Tomato sauce will fetch a higher price, and tomato sauce can be kept for a longer period than the raw tomato. We must begin to think of those things. How do we improve our agriculture sector, add value addition, create a market for them to actually export these goods? And then when we do all these things, we have done what is supposed to be done. Instead of having our copper go in its raw form, why don't we have a value addition implemented so that we add some sort of value within the country, and in the process we create jobs in that chain, and then we also grow actually the share of the activities within the economy. So those must be the things that must be now driving our thinking. How do we use what we have to actually better the economy that we are running?
All right. In case you're just joining us, well, this is the hot seat right here on Hot, and we have Mr. Robert Mwale, who is a public finance researcher at CTPD and the CSO Data Alliance coordinator, joining us on the hot seat this morning. If you have a question or contribution, feel free to give us a call now on 0974 870 877 or 0950 955 877.
You're listening to the Hot Seat on Hot FM 87.7. It's time for you to call now and get involved. Call now and get involved.
That's right, you can call us up. It's 0974 870 877 or 0950 955 877. If you have a question or contribution to the conversation that we're just having right here on the hot seat, feel free to call us now. Any question or contribution on 0974 870 877 or 0950 955 877. Those lines get you through to the hot seat. Good morning.
Good morning.
We can barely hear you. Sorry. So if you have the phone on speaker, just get it off speaker.
Good morning, Peter.
Good morning to you. What's your name?
This is Dixon on the line.
All right, Dixon. Please go ahead with your question or contribution.
Okay, first a contribution to my brother Robert Mwale. Having followed him and articulating issues so well of public interest, I feel he can do better if he wants to champion the presidency seat. We need youthful leaders to lead this country in the near future. So I feel with how best he understands the economics of this country, we can do a better job there. I thank you.
All right. Thank you very much, Dixon. It's 0974 870 877 or 0950 955 877. Do call us up now if you have a question or contribution. Mr. Mwale is here to tackle those. Good morning. Hello, good morning.
Good morning, Tuesday.
Morning to you.
Bueno Bwanji.
Mugamana Dr. Proud.
Yes, Dr. Proud.
So, Karambo Mwale, here in Zambia, we need the proper research. For example, we need to have Bukanjanjika Matero. We have abandoned the railway system. when we have buses. When you go to Russia, Ukraine, our friends are using a post, airline, train, helicopter, but here is only the bus. The train will go from Livingston to Kukuba Place is not moving in the way it was. When you go to train, there is a lot of glass. If you let it down from Uchirenge to Matero, we extend from Uchirenge again to Chongwe, from Chongwe again to Kafiwa. People have employment. So you research a lot of tasks. We got a Minister of Land. He's busy giving you photo. He's not resolving bad site. Chikwana is the fool. Left at the fool is the fool. All those are you people in the city to advise the people in the authority. Those people are telling plot this schools, parasite, embassy, no matter plot in the tour. This is the silver line for creation. That's why you see this mantle of drainage are challenged. I end up to Dr. Proud.
All right. Thank you very much for your contribution. It's 0974-870-877. 0950-955-877. Those lines get you through to the hot seat. If you'd like, if you have a question or contribution to the conversation we've been having this morning, we'd like to hear from you. It's 0974-870-877. Good morning.
Good morning, Peter Zulu. How are you?
Good. How are you doing? What's your name?
Simbule Clinton.
All right, Clinton, please go ahead with your question or contribution.
Mr. Robert, how are you, sir?
All right, Clinton, how are you?
I'm good. First and foremost, I must state that you're explaining quite well on how the credit ratings of a country affect the citizens on the ground. However, I have a question. I don't know whether the government does involve the citizen, or rather inform the citizen before it engages into certain debt, knowing very well how it affects a common man on the ground. Or perhaps is there maybe a legislation of parliament which regulates government before it gets into credit acquisition? Is there such a thing, Mr. Mwale?
All right, we're going to give him a chance to answer that question for you, all right?
All right, thank you.
All right, thank you very much, Clinton. It's 0974-870-877 or 0950-955-877. This is the hot seat. Give us a call if you have a question or contribution. Hello, good morning.
Hello, good morning, my dear moderator, and good morning, our guest there.
Morning to you. What's your name?
My name is Mr. Makondo.
All right, Mr. Makondo, please go ahead.
Yeah, I'm calling you from Saro right now. I think mine is just to compliment that man. He's explaining so well. How I wish he could be engaged so that he can be doing it even in local languages, And then he should also be engaging these members of parliament to be having workshops with them. Because the way they come out and the way he's explaining, you would really wonder to say, so this is what's happening. And even the presidential candidate, I think he should be taken, because they are misleading us a lot. To them, they don't even see value in debt restructuring. All they do is they just say, no, nothing, atangiwa. So, sir, in conclusion, if you can have time to be having workshops with these presidents, aspiring candidates, and then members of parliament, and then if you can do it in local languages. Thanks very much.
All right, thank you very mumuch. It's 0974-870-877 or 0950-955-877. Good morning.
Good morning.
Morning to you. What's your name?
This is Tony Katapaz.
Sorry, come again?
Tony.
Tony?
Yeah, Tony Katapaz.
All right, Tony, please go ahead.
Good morning, the guest there.
Good morning, Tony. How are you?
Good. Mine is also just to appreciate the way you have analyzed the thing. I don't know, like the way the previous caller, Mr. Makonda, said, why Zambian will not understand in that category. I think it would be very important for the government next time when they engage in such things of like getting loans from outside, they should involve the people so that they understand the implication of the loan. they should understand that this loan we are taking will come at a time when they'll be matured. I might not be the one in the government. They might need my colleagues, and you have to understand whatever issue will be coming up. We are doing this to build the nation in future. So in future, when things are bad, you should remember that we got the money from this, and the implications are like this. I think it's very important for the Zambian people now to appreciate what it means by debt restructuring. I think it's high time people like you started going around the country to sensitize people what it means. Because when you are talking about the restructuring, it looks like just a name. But now the way you have explained, the way you have put it, someone who has a good SIM card, you can understand that this was a milestone to restructure. It was not an easy thing. It's an achievement, and it has made a bit of progress. We cannot do anything like the rest things were. We couldn't do anything without restructuring. Over that, I give you 100%. You're on the right trajectory. But I thank you very much. We need more explanation of this.
All right.
Thank you.
All right. Thank you, Tony. Thank you for your call. 0974-870-877 or 0950-955-877. Good morning.
Hey, morning. How are you?
Good. How are you doing? What's your name?
I'm talking to Morgan.
All right, Morgan. Go ahead with your question or contribution.
Yes. Good morning, my brother.
Good morning, Morgan. Morgan, how are you?
What we need is to work on economy, and we need more economy to come on the board. Economy should come here, bring idea on the table, so that our economy should do better. Because the lives of the people are lying on the economy. Economy is to be cheaper. But the people want to buy cheaper cheaper fuel, easy life through economy. We don't have less people. We have hard working people. Mothers come 04 for work. Drivers wake up 04 to drive vehicles to take the people where they want to be. So if economy is doing better, everybody will be happy. We have got people to bring good, and this good nobody can come because economy dramas are good. But we want better on economy. And lastly, these are the clue of what FM. I was recently in the morning with somebody saying, why Museka Seka? So that person should not repeat again. The radio is about entertain, educate, and pay for. When you entertain, it's about working. So thank you so much, and please.
Thank you very much, Morgan. Please, I think we've gotten a few concerns there that you can respond to, Mr. Mwale. Let's tackle those, and then we pick up more calls.
Okay, thank you so much. I think I'll start with Morgan. I cannot agree more than what Morgan has said. I think we are a country of very hard-working citizens. If you had a chance, Mr. Zulu, of living in these compounds, you find that around 04, you find already buses are shouting, Soweto, Soweto. You find our mothers, you find our drivers waking up very early in the morning to just try and ensure that they put things on the table. But I think the cost of living still remains elevated, and they seem not to be enjoying the fruit of their labor. I think that is what comes out clearly. So it then becomes prudent that as a country we finalize the restructuring process, control how we accumulate debt going forward, to ensure that our debt service pressure does not take out a significant portion of what we need to support the people, so that we have citizens that should be able to actually see the benefit in the labor that they are actually, and activities that the economic activities that they are doing. And then Tone talked about, I think Tone as well as Clinton, they are asking a question: does government involve citizens when they are contracting debt? So that when we are in this situation as citizens, we then say, no, we were there and we knew when debt was contracted. But what we must know is that as a country, we are learning what is called a representative kind of government. So meaning this country has been divided into constituencies. And in those constituencies, the people in that constituencies, after hearing from different candidates that offered themselves, they chose one and said, this is going to be the one that will go and represent us. Mm-hmm. And that representative went to parliament, that they now call their MP. So whatever the MP agrees to in parliament is not agreeing for himself, but he's agreeing on behalf of the people. So meaning, what are we talking about when we come to issues around debt? So government through every year presents what is called the annual borrowing plan before parliament. So it will say, this is how much we intend to borrow this year, and this is why we are borrowing this money. So they will indicate, this is the budget that we have. Of this budget, this is how much that we've raised, and out of what is the deficit, this is what we are going to borrow. And the money that we are going to borrow, this is how we plan to spend it. And once that is done, submissions are done, and what government will do is that they will actually extend this to different kind of players to make submissions on this. So that when the members of parliament actually agree to what has been borrowed, it's actually all of us that have actually agreed. So meaning, in short, what we are saying is that through our representatives, the Zambian people are actually engaged. So it is actually the duty then of the members of parliament to go back to their constituencies to actually explain these things to their people, because these are the people that took them there to represent them. So if I am their representative, I must be able to go to my people. This is what government is planning to do, and these are the things that government wants to do, and now tell me, what should I go and do as your representative? No, we want, okay, we can contract this debt, we cannot contract this debt, based on you getting the views of the people that you're representative, then representing, then you go and speak your voice there in parliament. But we must also note that we are looking at a democratic representative here. So you find that the majority ultimately will still have their voice heard, but it does not mean those that have opposed, their voices have not been heard. And then there is an issue of Dr. Proud. He says there is need to actually invest in research. I think he spoke on the issue of diversification in the transport sector. I think you and I cannot agree more with what Dr. Proud is saying. If you look at the kind of congestion that we see on our roads, when we already have tracks of railway within the vicinity of our township, I think it would be more prudent if as a country we may review and think through of investing, trying to boost the railway transport, and I think this is what government is doing, where we've seen a lot of investment that is seem to be coming in the railway system. I think the whole idea is to decongest our roads, especially in the bulky transportation of goods and services that have got actually a greater impact in terms of destroying the quality of our roads. And so diversification is important. I think it would be nice if we can think of not just having the railway transport working for longer distances, but introduce it within the local setup, because you decongest our roads, we have less traffic and all those things, and that becomes a good suggestion that I've heard from gotten from Dr. Proud. And then there is an issue from Mr. Makondo, where he's suggesting training of aspiring candidates and also thinking through these discussions in local languages. I think this is a brilliant suggestion that we may actually have to look into as the CSO Data Alliance to ensure that the information is actually disseminated and no one is actually excluded from having a chance to this information. Dixon Moyo talked about championing for Eagle One. The ambitions of becoming
He's thrown your name in the hat.
The ambitions of becoming the president of this republic are not yet there. I think for now the focus is to provide relevant analysis and actually support to ensure that we drive and influence policy decisions now. And I think that is all from the submissions from the callers.
All right, let's pick up more calls. It's 0974-870-877, 0950-955-877, 0967-877-447. Good morning, you're through to the hot seat.
Good morning.
Good morning to you, what's your name?
Yeah, my name is Mwamba.
All right, Mwamba, please go ahead with your question or contribution.
Yes, my ask is, could we break down the debt situation for us so that we appreciate that is in 2021 and after 2021. Thank you.
Okay. 0974-870-877 and 0950-955-877. Good morning.
Yes, good morning.
Morning to you. What's your name?
Mr. Here.
Your name again?
Mr. Moa.
Mr. Mwaba? Mr. Mwewa. All right, Mr. Mwewa, I'll ask you to just, kindly speak up and just switch off your radio. If you have us on loudspeaker, get us off speaker and just switch it off because we're getting a terrible feedback.
Good morning, Mr. Mwewa.
Yeah, I'm listening to your discussion today. I think it's also good and must progress at the Mwale in such a study of applications for this time. For my common sense, like you know, it's your field, but it has to take someone with the heart to be able to explain to people what they don't know. Because most of us, and then the people should say, we should call ourselves, we don't know those statistics, but we just keep on wondering how government does things and what are the indicators they look at when they are trying to borrow or to get, external loan or credit. Okay? Because as you said, that the impact is always felt by the common person like ourselves. And I think from this, my appeal is that can you, if at all you can get this about, can you form up an organization that will be just specifically be looking into these matters, going around the country and be able to explain on these issues, you see? Because it's not everyone that should know or that should learn about the accounts and maybe economics and stuff like that. So we are best economists. And thank you for this prize that you're giving to us through the radio program. So my appeal, I think, is ready. If you can form up an organization to be able to go around the country and explain on how these things are done.
Okay.
If you don't consider to pursue Eagle One job, as someone has already appealed. Thank you so much.
Thank you very much. Thank you, Mr. Mwewa. It's 0974-870-877. I know you wouldn't get zero already if you went there. You have 2 votes. Good morning.
Good morning, Peter Zulu.
Morning to you. What's your name?
Mr. Peter Tembo here.
Mr. Tembo, we have Mr. Mwale in studio. Please go ahead with your question or contribution.
Mr. Mwale,
Mbona Tembo?
It's one of the bus drivers.
Okay.
Mr. Mwale, ukamba kwalo kumbeka mushe maningi. Watu pa ground by this time, muga tenda ola kwa na situation mamaili. But swazi wakuti cholengeza uti vitu vikare so ni chani. Kwa mwambene manondo choka mu 2012. kufikia mu 2019 somewhere there drama masikana yako ngoelewa. So like munga bonse makolazi mamacha explain sensitization ndio ameibuta kuti bantu understand background even ma marketing ma passport bantu wako kutambia chapa swazi la the cause za kuti vintu bapeza ba vili high so mame bakambira banzatu wenda wasta contribution is just the same nine maoni kambira sensitization background ndio amefuna kuti bantu walista panja walista understand ziko mwambira wa Mwale mpitilize na historia.
Okay, thank you.
Ziko Tembo, please respond to those.
Okay, thank you so much. I think Mr. Mwaba asked on the debt situation. Mm-hmm. I think we have spoken to this. As of 2021, what we had done is that what you notice that there was no publication of actually the debt situation. It only came out in 2022. What we noticed that our debt was actually sitting at $33.3 billion. That was our total public debt. But as of 2025, our total public debt is actually reduced. It's now sitting slightly at $25 billion. That is both domestic and also external debt. So there is a significant reduction in terms of the debt between the two periods when you look at them, and I think that entails that there is a lot of fiscal discipline. There's a lot of prudence in terms of how we are actually managing the little resources that we are mobilizing to ensure that we don't go back and crawl back to the serious debt situation that we were in. Hopefully we continue on this trajectory and completely get out. And then Mr. Mwenya asked of forming up an organization to champion the debt situation and just to sensitize the people on the ground. I think these are the platforms that we are already doing this, and I think the CSO Data Alliance is doing that much of this work. But I think we appreciate maybe there is need to actually decentralize in terms of amplifying the citizens' voices to go into different areas and to just ensure that this information is actually disseminated to them. And then Mr. Peter Tembo, who is one of the bus drivers, he said the situation on the ground seemed to be bad, and he's attributed that it could be that people are not understanding on the ground really what has gotten us to this situation. And there is need for sensitization so that people understand this information. So I think it tells you that there might be an information gap on the part of government. We might be not doing well in terms of public relations, because if our people do not know what we are doing, the strides that we are making, then there must be a problem in our public relations. I think there is need for that improvement on the part of government. But I think on our end as civil societies, we continue to speak on behalf of the people and to try and actually put up this information out there. And we hope government can actually come to the table and also ensure that they actually disseminate this information so that people are given the accurate information that avoids the situations where people begin to feel like there have been people who actually take advantage of the vacuum that exists, especially these, because mainly I think this information, you know, ultimately there are politicians involved that may champion a different voice. And so before that is done, maybe government must also give themselves a chance, explain the situation to the people, so that as other political players come in, as the civil society come in, we then have some sort of balanced information and there's fair competition on the political space, those that are in political space, to ensure that citizens as they are making decisions, knowing that next year we are going in an election year, they vote then from the point of being informed, not of the information that they have just picked out. So it becomes important that there should be that frequent communication that goes out there.
Okay. That brings us to the end of the hot seat for this week. Mr. Mwale, I would like to thank you very much for coming through to the hot seat this morning.
Thank you for having me. And I think thanks so much to the listeners that have taken time to just tune in and listen.
All right, that's our show for this week. We'll be back with another edition of the Hot Seat next week, Tuesday, with my colleague Chisha Mubambe right here on Hot. The heat is on. Coming up next is the Urban Vibe with Honey. Keep it locked on Hot 87.7. Until next week, Tuesday, for another edition of the Hot Seat, it's goodbye for now.
That was the Hot Seat. Don't forget to join next week at the same time, exclusive to Hot 87.7.